Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education playlist on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. For today's video, we're going to take a look at something from my fourth book, Trading Journal, Trading Wisdom Part 2, and Good Trader Habits. So define your risk. What does that mean? Well, you want to make sure that every time you enter a trade, you know what your trading idea is, right? Like, what's a stop loss? Well, your stop loss can be a price level, okay? But your stop loss in theory should be when your trading idea fails. And what that means is when the trading idea fails, you have a decision and you can hold on to the trade that's a failed trade, or you can cut the trade and you can define your risk. Every time you remove a failed trade, every time you take a little profit, every time you sell a little bit of a loser, you're defining your risk, right? Every time you take profit or sell loser, your remaining position is smaller. So it's a smaller percentage of your risk assets. So what's critical is you know that when your idea fails, you need to move on. And so that's the idea is, how do you define your risk if you haven't even defined your trading thesis? Well, you have to start out with a good idea, and then you can know where the idea fails. So for example, if it's a breakout of the $100 level and you go long, well, if the price fails to hold above $100, your trading idea has failed. You know, it's the quote here, stay single, don't marry your bags. And, you know, traders turn into investors really easily. When they start out, they try to guess the reversal, they try to play a bottom, and it doesn't work out. Then they keep adding to it, and now it's their bag and they're married to it. You know what? I'm an investor now. I like the company. I'm going to continue to hold this trade even though it's failed. So you want to stay single. You want to make sure you define your risk and cut your trading ideas when they are failed, right? A carefully laid in plan, a carefully planned out trading idea with the confidence to execute it, which means the confidence to cut and run when it goes wrong, when your idea has failed. If you let the market define your risk, it will define it for you by liquidating you, or it will define it for you by forcing you to capitulate when you're down 90, 95%. So good trader habits are about taking your trading seriously, having a well thought out plan, respecting your money. And these are the habits that are going to help you stay out of trouble and stay in the game as a trader. Always define your risk. Don't let the market define it for you. This is from Trading Journal, my fourth book, available on Amazon. And this is part of the Trading Encyclopedia Daily Education playlist. Catch me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Thank you, folks. Talk to you soon. Big Chads out.